Now let us consider another question. Here you are given information regarding profit and various expenses from the books of a company, and you are asked to calculate cash from operation. Calculate cash from operating activities. So in this case, we are given net profit. We can't do direct method. In that case, we must be provided with opening and closing balances of sales must be there, and your cost of sales must be there. So to find out the cash received from debtors or cash paid to creditors, and expenses paid, cash paid towards your expenses and all these aspects. This is the information. Just an income statement is given, that is after net profit. Income statement after net profit. And it is like an information given. It's not in the form of an income statement given. Net profit for the year 15 is given as 5 lakhs, and depreciation given as rupees 25,000. And all these details with regard to opening and closing balances of income received in advance. So let us first identify these items, whether they are current assets or current liability. So income received in advance is a current liability. So what you must try to understand in this kind of question, you can't do direct method. You have to do only indirect method. Why you can't do direct method? Because sales information and cost of goods sold or cost of sales, cost of materials consumed kind of information or not given in the question. You must try to understand. So you can apply direct method only when such information are given in question. So in this case, we have to add back depreciation and then do adjustments with regard to current assets and current liabilities to arrive at the net cash from operating activities. So income received in advance is a current liability. So when there is increase in current liability, you are getting more credit. That means you will have more cash in hand. So it should be added, 1,000 rupees to be taken as add item. And prepaid expenses being current asset, when it is decreasing, expenses prepaid or paid in advance, expenses paid in advance has declined. That means 400 rupees, you will have more cash. So decrease in current asset means increase in cash. So it should be added. Decrease in current liability and decrease in current asset and increase in current liability to be always added. So these two are add items. And even debtors also current asset. You just see 2,10,000. Whereas here debtors has increased, that means you will have less cash. So 20,000 rupees less. And creditors, you are making payment towards creditors. From 1,16,000, it is now reduced to 1,10,000. So 6,000 rupees you have paid to settle some of your creditors. So this will reduce your cash position. So it should be taken as less item. Outstanding expenses, again current liability. So current creditors is current liability. Decrease in current liability means you will have less cash for operations. Increase in current liability means you will have more cash in hand for operations, which should be added. So similarly, outstanding expenses being current liability has decreased. Your outstandings have decreased from 5,000 to 4,000. It means we have made some payment. So you'll have less cash. 1,000 rupees less cash. Accrued income is a current asset. Income earned but not received. Okay. So decrease in current asset means increase in cash. Accrued income has decreased from 3,000 to 2,000. That means you must be having more cash. It should be added. So decrease in current asset means increase in cash. Decrease in current liability means decrease in cash. Decrease in current liability means decrease in cash. Increase in current asset means decrease in cash. Decrease in current asset means increase in cash. Decrease in your prepaid expenses means we'll have more cash in hand. So, after adding depreciation, if you adjust all these aspects, you will get the cash from operating activities. Now we move on to the workings. So, statement showing cash flow from operating activities. Indirect method. So net profit before tax and extraordinary item. So here it is simply given as net profit. So we are presuming it as a net profit before tax and extraordinary items. Rupees 5 lakhs. Add depreciation. Rupees 25,000. Rupees 5 lakhs 25,000. So increase in income received in advance. This is before working capital changes. It should be adjusted. So increase in income received in advance. So the current liability is increasing. So you'll have more cash. Then decrease in prepaid expenses. Decrease in prepaid expenses, more cash in hand, so added. Then debtors, increase in debtors. That means you are giving more credit, you will have less cash for your operating. So increase in debtors, 20,000 to be taken as less item. So you will have less cash balance. Then decrease in creditors. That means you have used cash for making payment to creditors by rupees 6,000. So your operating cash will reduce by rupees 6,000. Next, decrease in outstanding expenses being current liability. Decrease in outstanding expenses. So expenses payable is decreasing. That means you have used your cash for making payment. That means your cash in hand will decrease. Then accrued income, that is income earned but not received, your current asset is decreasing. So income is decreasing comparing to the opening and closing balance to be added. Decrease in accrued income. I'm sorry, it should be added, right? It should be taken as add item. It should be taken as add item. So we have given effect to all aspects. So 20, 26, 27, 27,000 minus plus 525, 526, 527, 527, 400, 527, 400. So it should be 5 lakhs and 400 is your cash from operating activities. Cash flow from operating activities.